Okay, I'll give it some time to get the participants in. I see the number rising. Okay, the number seems to have stopped growing so fast. So I think we are good to start. So hi, everyone. Thank you for joining us today. I'm your host, Rebecca Stevens. I'm a research analyst on the data team here at The Block, and I'm very excited to moderate today's webinar, Reshaping Crypto, a deep dive into investor sentiment and confidence for 2023. Today, we're going to be assessing the current state of the market and discussing how the events of last year will impact the year ahead. I'm glad to be joined today by our esteemed group of panelists who I'll let introduce themselves. Let's go around and share name, title, and place of work. We'll just go around in alphabetical order, so Julio can go first, then Markus, then Philip.
Hello everyone, and thank you for the invitation. I'm Julio Moreno. I'm senior analyst at CryptoQuant, which is an on-chain data provider and researcher.
Yeah, hi everyone. My name is Markus Thielen. I work for Matrixport. I'm head of research, and Matrixport is a digital asset investment platform. We have teams in Asia, we have teams in Europe, and we have teams in the US, so we are quite broad. And yeah, we focus on research on actionable trading ideas.
Thanks, and I'm Philip. I'm the chief economist at Chainalysis, so blockchain analysis company, and as chief economist I do a lot of product development, especially around how we can use on-chain data to understand things more broadly than the normal Chainalysis perspective of risk and compliance, understanding the market, investors, and indeed companies even understanding what their customers are doing on the blockchain.
Cool. So as you can tell, we've got a great group of speakers today. Also, as we begin, feel free to type any questions that you have in the chat, and we'll do a Q&A session in the last 15 minutes of the webinar. Okay, so now I think we're good to go. So needless to say, 2022 marked a big turnaround in crypto market sentiment. We came crashing down from the highs that we saw at the tail end of 2021, and then faced several collapses of both decentralized and centralized entities that shook people's faith in the industry. 2023 has been off to a good start price-wise so far, but how do market participants truly measure investor sentiment after a tumultuous past year in the market? So we'll start pretty broad, like just by discussing some of your firm's key areas of focus when assessing investor confidence. So just like off the top, like what are the key indicators or metrics that you guys look for when you're evaluating investor sentiment?
Should I go first? Okay. Yeah, okay. Here at CryptoQuant, we have developed an investment framework for digital assets. So we look at a variety of metrics, but we classify them as valuation metrics that determine if prices are overvalued or undervalued, and by how much. We also look at the flows of capital, where coins are moving from one market participant to another. We look at spending behavior. What are large entities doing with their coins? Are they getting rid of those? Holding behavior, which what are large entities? Are they keeping their coins, or how much of the total supply has that moved? We look at miners. For instance, in the case of Bitcoin, what are miners doing? Are they, growing their reserves or sending their coins to exchanges, and what does that mean? And we look also on network activity. So it's an investment framework that we have developed, and we look at these different types of indicators to come up with a big picture of the industry and of each coin to assess investment opportunities for our clients. So it's mostly it's not a particular metric, but a set of metrics inside this investment framework.
Yeah, I think on our side is of course very important that we kind of get some of the big moves right. We look of course on what's happening on chain. We look at activities, as Julio was just saying, but we also look at we look at volatility. We look how perps are trading versus spot. We look where open interest is changing. So it's a little bit more kind of like more trading signal that we are looking, especially in a time I think when the market is quite hectic. So I think a lot of on-chain data I think can be used for like the slower periods of the market when the market are gradually moving. But I think when the market is hectic, I think you want to like analyze when sentiment has reached like a like an absolute high or an absolute low. And I think you can see this a lot more in kind of the the futures data. So we're looking at a lot of this, and we're publishing some ideas like on LinkedIn quite regularly, and yeah, that's what we're looking at.
Cool. And I guess I really echo what Julio said. Looking at the on-chain data, I think the framework makes a huge amount of sense. And Markus kind of saying, look, actually, you do sometimes need to bring in some of the off-chain data to understand sentiment. The other thing I'd add, on-chain, I look at the cost basis. So that is the price at the time that wallets received assets. And you can, for example, create like a cost curve where you can see, for every Bitcoin, for example, what price do people buy in at? And seeing how that changes over time and how close the price is to the majority of the cost basis has typically, outside of periods of real stress, been a good indicator of the level that people are willing to buy and hold at. So it can help, give you a bit of a floor, although it hasn't been that great this last year because crypto's had a lot of periods of stress. The other indicator that's helpful, though, similar to that, is the realized loss. So that's when people actually send assets out of their wallets at a price that's below the price they got assets in. And for example, in the weeks of the Terra Luna collapse or the Celsius or FTX, we saw those realized losses get very large, but they actually were getting progressively smaller over time. And so that type of indicator can tell you if people are going to take losses and the scale they're taking losses. So yeah, those are the kind of key indicators I'd add on top of that.
Nice, yeah. Great points. Oh, do you have something to add, Markus?
No, I was just, just wanted to add because, Julio was saying, there is a framework, you can look at all these indicators and, crypto has a lot of data, but of course, each of these events had like a different signal or a little different trigger, right? I mean, you saw, for example, with the Luna Terra implosion, how TVL started to decline massively, how the Anchor protocol, came under stress. And I think, and of course, you had like with the FTT, you had the FTT token became under stress and everything. So unfortunately, there's no blueprint for every of these crashes. But I think you can do the homework. You can look at all the data points and see which one starts to blow out and take kind of signals or indications from those indicators.
Yeah, I guess on the topic of there being no exact blueprint, like sometimes you'll see like an increase in activity on like a certain platform, but it's because people are farming an airdrop that they're speculating will happen, or you see like certain pairs gaining trading volume on an exchange, but it's because of like a fee promotion they're engaging in. How do you stay on top of the market so that way you can figure out like what's an organic trend versus something that's like has a pre-mediated reason?
Yeah, what I would say is like, as on-chain data has a lot of noise. So we need to filter for the big transactions to see if there's material effect on the price of this transaction. For example, sometimes we'll see large outflows to exchanges, right? And but sometimes it is just the same exchange just creating a new wallet. So we need to filter for that, and it takes some time to determine if that's just a new wallet being created for the exchange, or if it's really an outflow from that exchange. So we'll have to filter for all those events. And yes, I would say that as a researcher, we provide that for our clients. We investigate large transactions from exchanges, from miners, from known wallets, and to discern if this is like a true movement with a purpose, or just the same entity creating a new wallet for them.
Yeah, and I guess to go in the order as we're keeping around the clock, and we're providing also we're providing some slightly different data points, but we're looking also and putting some judgment. If this airdrop is going to be sustainable, if it's a one go or something, or if there's more to come. We have seen a lot, of course, during the yield farming periods that the APYs were very high, but then of course 1 or 2 days later they started to really drop off, and then users started to move on. So I think it's really like case by case basis, unfortunately. But I think it's really like a judgment call. What have we seen historically? Is it sustainable, or is it really just like a one-time event where we see revenues going up, where we're seeing activity spiking going up, and then basically user activity moving away? And I think that's really where we need to stay on top of it and need to do our research. And that's why I think research is invaluable in crypto.
Yeah, to pick up on that last point, it's kind of crazy in a way that it has to be case by case. All this data is on the blockchain. You should be able to do it in some kind of programmatic, analytical way. The problem is that the data's kind of got more complex over time, right? With Bitcoin, you can transfer it and you can hold it, and that's basically all that you can do. Whereas once you get into DeFi and Web3, you can swap it, you can mint, you can lend, etc. And each of those sort of new verbs, ways of doing something in crypto, requires its own parsing. So to get that data out, is harder and harder because things can get quite exotic. And you might see there's an opportunity in this like small asset or this particular pool. Well, that means you've got to understand the data structure of that to be able to go and investigate it deeply. And that's why there hasn't really been like a way of cracking the code of this at a really large automated scale. And people need to kind of dive in and do some research. And then the final thing I'll say on it is there's sort of also these big numbers and small numbers in crypto. Like about 90% of what moves on chain is flows between exchanges and flows between wallets that hold assets for like less than 2 weeks. And so that's just kind of assets moving around the ecosystem. What's really interesting is, is there a small set of wallets that held for a really long time and suddenly they send something? So you've kind of got to separate, as Julio said, like that noise out and just focus on like the smaller numbers, which can sometimes kind of be big dollar amounts that really move the market. They just look small compared to the almost mechanics of people just settling assets on the blockchain.
Yeah. So also speaking about like needing a new methodology, basically anytime you want to like kind of engage in a new form of data analysis. So Philip and Julio, you guys work at like data firms. Markus, you obviously do a lot of research. Has there been like, especially after 2022, has there been like certain data areas that you found people being more interested in, like especially after FTX collapsed, like people really made a push for proof of reserves, and like people are really interested in exchange flows now and like checking liquidity. Like how are you guys handling the like shift in like what on-chain data people are asking for, and like what are people asking for these days?
Yes, definitely. As you said, after FTX, we saw increasing need for people to analyze the health of exchanges, centralized exchanges. So a lot of them started to publish their proof of reserves, their audits, and we have this dashboard where it shows everything, every proof of reserve for every exchange that provides that. And so there's a lot of demand for that to analyze the health of exchanges, of these big players that hold a lot of people's money, right? And I guess going beyond the proof of reserve, as data providers, as on-chain data providers, we can help in comparing what the exchange is giving us as data with our estimations, because we have that estimation. So if we can analyze if it makes sense what the exchange is providing to the industry as data. And yes, I would say that proof of research is really important, has increased a lot in importance after the FTX collapse.
Do you think that will be sustained, or do you think people after a year will kind of go back and start trusting centralized exchanges in the same way they did before? Like, it's a question I have, right? How frequently are people still going to be checking proof of reserves dashboards in 12 months' time? What do you think?
You know, I think that beyond that, it's our kind of our job to don't let them forget. So we need to be analyzing it on a regular basis and be the ones that like sound the alarm in a way. So yes, people forget, but I think it's our job to don't let them.
Yeah, I can appreciate that sentiment. Yeah, one thing I'd add in addition to proof of reserves, because seeing a similar type of demand, is to honestly go a little bit beyond that, which is when an exchange balance changes, who's the counterparty? So is that assets that are going to another exchange? Is it assets going into private wallets? Is it assets going into a private wallet that could be a cold wallet, like you talked about earlier, Julio, where actually maybe it's just the exchange moving it around? And so I think people are asking for a lot more context than they had before. They want to know not just that, hey, a balance has changed, there's been an inflow. They want to know, where it's gone, who it's come from. And that's actually really relevant if you look at FTX. There were large flows between FTX and Alameda. And I think in hindsight, obviously I saw those and I was a bit like, maybe that's just crypto, right? You get huge multi-billion-dollar flows on a blockchain and you never know quite what's going on. I think now people want to see if there is something that is unusual, that really is much, much larger than anything else, and have that in context so that they can go, that is an unusually large number, even for crypto. And that might set the alarm bells off. So yeah, people just asking for more context to understand and be able to interpret what's going on, given that so much of the bad behavior that happened, was kind of happening, off chain, even though it had this big consequence on the industry and on the assets that were held.
Cool. And then Markus, do you feel like your research has also been falling more into that area? Like people are more interested in researching these flows and reserves?
Well, it's a little bit less on flows and reserves. Of course, we have monitored them very closely. And of course, in December, there was a little Binance FUD where people get worried if Binance sees a lot of outflows. And we set up various other metrics that kind of helped us to time this a little bit when it was basically over. And I was saying earlier, it was something about the perp contracts, how that's traded. So it's more kind of the collective wisdom, I would say, from everybody who's actually trading and engaging. At one point, for example, the BNB perp was trading at minus 130% negative annualized, and and that when I came in, it was kind of an indicator that the FUD was over. And I think there were several other indicators like this. If the market cap of BNB, how that was changing, and various others. So we set up these metrics for various exchanges, because again, I think you have a worry in the market that others have similar issues, but currently nobody's pricing any negativity in this sense. But yeah, we have kept these balances internally. We have sent them to clients, and as Philip was saying, there's suddenly a lot more scrutiny and demand from clients and investors to know a little bit more than just a headline number. What is the composition of exchange, the exchange's balance sheet? Is it all a stable coin? Is it is the money in their own token? Is it in other tokens? Is it in BTC? So it's a lot of you can really spend all day analyzing this and monitoring all these data points, because these data points change like every minute. But I think at the end, we want to make investment decisions and be better informed, and trying really to analyze, which indicators might indicate when the market is turning, when the FUD kind of disappears, and and then again, we're running all this data to really come up with, what is the next worry of the market, and it just kind of moves from one thing to another. So.
And just adding to what Philip said about context, and also you have to interpret the data, especially for exchanges, in relative terms also, because you know, when Binance was having a lot of outflows, and people were saying, you know, oh, this is a record amount of outflows, right, in nominal terms. So it's going down and everything. But if you look at a relative basis compared to their reserves, because their reserves have also grown over time, it was nothing that we haven't seen before, those outflows. So also just don't take the numbers just on a nominal basis, but also always on a relative basis to get a more view, a more you know, normalized view of the data.
Yeah. Another normalization that I think is really important is to not look at things in dollar prices all the time. So for example, I put outflows in like Bitcoin denominated values. So using the Bitcoin price to kind of set everything to the same unit, because that takes out the dollar fluctuation, right? If you get a day where the dollar price falls 10%, but the correlation between the prices of assets is relatively similar, then at least you don't see the sudden big dip. Like the number of times I've seen people look at a dollar value on-chain flow or outflow and gone, oh my God. You're like, well, that's just because the price changed.
Yes, I agree. Yeah, definitely.
I guess on that topic, like, because obviously USD prices impacts like a ton of things, like anything priced in USD becomes impacted, like beyond like normalizing to the price of Bitcoin. Like, do you have other preferred non-USD metrics like users, like transactions, things like that? Are there any like favorites that you have?
Yeah, I think transactions.
Sorry. No, go ahead. Go ahead.
Yeah, no, I think transactions are, hugely important. You know, especially I think when you look at the last couple of weeks, actually, Ethereum transactions started to go up. You know, gas fees started to go up, and I think you can make an argument. You know, this is why Ethereum is suddenly outperforming, right? I mean, year to date, I think Ethereum is up something like 25%, versus stocks. You know, the S&P is up only like 2 or 3%. So it's not just about, you know, U.S. inflation coming in weaker. So it's really something fundamentally seems to be happening, and that's, I think, something you see on the transaction side. So there is something positive happening, and it's easy to miss when you just look at it from, you know, as a one-way risk assets up or down view. And I think that's why, you know, research can make a difference in crypto.
Yeah, well, one way I like to see the data is on a growth basis. So just not the level of the data, because you know, the levels have a autocorrelation, and they are autocorrelated. So you need to the trend, the data series that you're analyzing. So looking at data on a daily percentage change, or a monthly or annually. So you need to trend the data, and that will give you a better understanding of what's happening with the data, and it's statistically better to analyze it like that. So I really use a lot that you know, looking at the growth or the percentage change of the data, not just the level of the data.
Yeah, the rate of change. I agree. Yeah, of course.
Yep. Yeah. The other way that I look at the data sometimes is on a net basis. So if you've got like the flow from Coinbase to Binance, you also want to remove the flow from Binance to Coinbase. And that's really important because, like I said earlier, there's just often lots of assets moving around between them. But the net flow shows, you know, assets that kind of went from living in one business to living in another business. And so that really takes out a lot of the noise. In terms of looking at like numbers of users, so I do track that. You often need to filter. You know, you can't just look at number of wallets. Like I said, actually, the majority of wallets hold assets for a very short period of time. They're typically generated by other businesses or by, you know, more power users who might just generate addresses as part of their sort of own treasury management or like withdrawal processes. Honestly, looking at user numbers is more interesting for something like a stable coin. That's where you actually have like high levels of sort of potentially real world adoption, because you get lots of users who are transferring at relatively small amounts. You see that on ETH, you know, you see it on Bitcoin. Once you get to like the longer tail of assets, though, user numbers can typically be quite low in terms of like, weekly active wallets. And so I guess if that spikes suddenly, then it's informative. But it doesn't have as stable a trend as the assets that are used a lot. Your Bitcoin, ETH, your stables.
Cool. Okay, so then also, Markus, you mentioned that you were using like a combination of on-chain data, but also like perpetual data when you were like evaluating Binance. So like when you're conducting market analysis, how much do you rely on-chain data versus exchange data if you're evaluating an exchange or certain price things, or even other data like social media metrics, Google searches, like app rankings even? Like how do you balance what you're looking at when there's just such like a high inflow of data?
Yeah, a good question. I mean, of course, it depends a little bit what is really topical and what do we think is topical. Of course, with a lot of, I guess when you're analyzing exchanges, then you need to have a lot of on-chain data really. But I think if you want to kind of judge the sentiment within the market, it's maybe really more market relevant data, how the whole overall, I guess, sentiment is changing, with everybody who interacts, with everybody who trades. I think there are some really interesting observations, like after the FTX, we saw, for example, perpetual futures tended to trade really, negatively for the last year, because all these VC funds had a lot of unlocked tokens, so they already can, estimate when this token is becoming, unlocked, becoming into the wallet, and they're pre-hedged basically. But after FTX, there was, I think, so much market distortion that even though the Axie Infinity tokens traded actually positive. So I think you can really judge that there's a lot of market distress going on when you, I think, understand what's happening with certain underlying tokens. And I think we're just trying to really look at it a moment by moment. And as we said earlier, it's a little bit difficult to really have a blueprint and work with a blueprint like every day, because so much is just changing. And you can explain, of course, a lot of events in hindsight, and I think this is why everybody suddenly has become an expert on Alameda, how much they were holding, how much they were sending out, versus nobody was really highlighting this, before the event. So I think there needs to be some sort of, algorithm, smart process to really filter a lot of the data, and I think there is just too much data, that's being generated all the time, and the noise needs to be filtered out. But we're just trying to build models every day and trying to get better with this and have better predictions for those major events.
Yeah, for me, of course, we are the on-chain data providers, and we think that on-chain is the fundamental data set to analyze these assets. But yeah, a lot of metrics are a combination of on-chain data and market data, so we'll need both data sets. And regarding exchanges, it's you can make an example there of a combination of on-chain data and market data. It's for instance, look at trading volumes of the exchange compared to their reserves, and you can see where if the volume makes sense in that exchange compared to their reserves. So that's a combination of on-chain data with market data. And also a lot of the valuation metrics that we use and that everyone uses is a combination of price and on-chain data, cost basis of the users that bought that coin. So it's a combination, I think, of both data sets.
Yeah, just to get to the extra detail I'd add to that is it depends on your sort of time horizon. Like the way I think about it is like all your Twitter sentiment data and like your order books on exchanges and the news that's coming out, that will help you trade in the kind of minutes to hours, to days basis. If you want to be thinking about days to weeks, then you need a mix of the two, of on-chain and off-chain data. And if you're actually thinking months to years ahead, well, you either just need to read theses about how crypto is going to grow and what the narratives are, or you look at on-chain data to try and understand how people are holding and when people seem to sell and like what part of the cycle that we're in. So for me, it's all about time horizon, and there's different data sets are suitable for different time horizons.
So
And
speaking of more,
sorry, I just wanted to add, you can also use on-chain data to gather sentiment, and we've done this with flow data from, for example, from derivative exchanges to spot exchanges, because these exchanges will have different users, right? So typically, a user in a derivative exchange will be looking for more leverage than in a spot exchange. So the net flows, as Philip commented about net flows. So net flows between these type of exchanges will also tell you something about sentiment. Are people and traders, are they want to take more risk? So you'll see these net flows going to derivative exchanges, and if they want to take less risk, and then they'll go to spot exchanges, or maybe they want to just exit the industry, because spot exchanges are typically off ramps, right? So these net flows also tell you something about sentiment using on-chain data. And I think the good thing about on-chain data is like it's not just an opinion that they're expressing. They are expressing this opinion with their money, with their flows. So that's really, really interesting if we can discern what is happening in these flows and build useful metrics with this.
Don't agree with that.
Nice. So speaking of like analyzing some of those like longer term trends, like we saw some big crypto narratives in these past 2 years. We had DeFi summer, like the rise of NFTs, and they really drove the market. Like, how do you discover or predict the next big trend? Or can you even tell if one is coming up at all? Like even in like a market like this, like do we think there's like something emerging maybe?
I mean, I think right now the market's kind of in a wait and see approach. I don't think, I'd love to hear from the other people on the call if they're finding new narratives that are kind of being born right now. I think it's like, let's see how all the bankruptcy proceedings kind of go and how GBTC goes. And I think the main narrative right now is like, what's the next couple of months going to hold? But I do think, if we were to kind of go back in time, I think the thing that's going to be of more interest is actually tracking smart contract calls, like which smart contracts are getting called the most, because you don't always want to go to the level of like parsing the detail of those calls, be like, oh, that's a swap, that's an NFT mint. Instead, you just kind of want to say who's generating the most activity by generating the most number of calls, or who's paying the highest gas fees. Like there are actually some very high level metrics that you can get without a huge amount of work that give you that very early indicator of kind of what's new and popular on chain. So that's really the data set that I would watch if you're kind of doing that real horizon scanning. Don't know what other people think, if you think there are big narratives out there already being born in the aftermath of FTX.
Yeah, I mean, we're looking a lot of revenues, transactions and everything, but we're coming from a really very low level. I think we're like down something like 95% or at least 90% really from the November 2021 highs. So, we can like celebrate really coming really from the floor a little bit higher, but it's nothing really to write home about. Of course, some people talking about the Shanghai, ease upgrade in March, others, talking about, the upgrade that is coming then in the summer, but there is no big story happening. I think, when you look back in history, how DeFi summer started, how then it continued with the whole NFT craze. I mean, right now it's very quiet. I think right now you can almost look at, I think like Google Trends maybe gives you like a good indication that we're a little bit like in no man's land and everybody's kind of like waiting. I think everybody seems to be waiting more on the regulatory side. I think institutions still have done a lot of work. I think they were kind of like, brought into the space like kind of like 2 years ago. On the one side when the Chicago Bitcoin futures were approved, and then later on when it gained more volume. And I think those people have not, closed down their institutional activities. I think they have continued to build their capabilities, but I think they're waiting more for a regulatory approval and for a regulatory goalpost. We had some positive news coming out of Hong Kong 2 months ago, and I wouldn't dismiss this because China has been like a large driver before on the regulatory side. But I think right now people waiting, how some of those bankruptcy proceedings are going, with the GBTC overhang and so on. I think until those things are cleared and something else needs to emerge, but there is nothing really, I think, that we can really, talk about right now. So.
Yeah, from our side, talking to clients, I think they're past that that period of where they were just investing in like everything, like because everything was going to increasing in price, right? So it was right now they are really being a lot more selective on what they will invest on. And for that, they need to, as Philip said, to look at on-chain data, to look at specific contracts, specific tokens that are showing growth, that are emerging, and different types of data of on-chain data will tell you if that's really happening, the story. So yeah, I think it's more like the investor is now more selective of what they will invest on in this year and going forward, different to what we saw in the last couple of years where everything was going up and it really doesn't matter. So we're seeing more of that with our clients.
Yeah, I mean, one way to look at it is also, what is performing year to date the best, which sector, and I think you can, drive some stories around those. I think beginning of the year to now, you had really some of these game tokens and metaverse suddenly performing a little bit better. We had some land sales, we had some more, I guess, some airdrops here and there. Some small. I mean, these are not big waves; these are more like little ripples. That we're seeing in the market, but that's certainly like one theme that's developing is really that people have been buying these really bombed out kind of like gaming tokens like Gala, for example, and really kind of the kind of metaverse, Mana and Sand, Sandbox and Decentraland. Yeah, so that's kind of like a small theme that's developing.
Awesome. So now we've talked about a lot, how we use this data, what data we're analyzing. And I guess now you can plug your own product, but also so basically what tools do you guys provide to your clients to help them better evaluate this data or handle the market? And also what other tools do you guys using beyond what you work on yourself to just get your information?
Yeah, well, okay. Yeah, for tools, I mean, we do have, it depends on the type of client. Retails use more the platform, our web platform, our charting tools, dashboards. So that's that they can create. And the institutional clients, there are big data users. They use more our API to pull data from our side and feed their models. So that's what they mostly use, the API. And I think what's emerging, or the next tool is make it really easy to filter the noise. That's one thing that we are really focusing on, and to filter all the noise from the blockchains so that you can really get what you're looking for. So for instance, if you're looking for let's say flows from coins that are certain amount of age, right, old, but you want to filter out the big entities that hold Bitcoin, for instance, like the GBTC, you don't want those because those doesn't move. And so I think for tools, it's make it easier for the user to filter all the noise and get what they really want, and the one data that is delivering signal and actionable insights.
Yeah, I mean, our business model is a little bit different, but we have also built a large analytics, platform, I think you can call it, that we probably going to start releasing to clients as of next month. We of course on the research side, we're writing a weekly 12 15 page report that comes out every Friday, so it's going to come out tomorrow. And then we publish a lot on the Matrixport LinkedIn page as well, where we're staying in touch with parties that are interested in our research and so on. And we're participating also in like a weekly webinar where we share our views. But I think there's a lot more interest from clients. It was like quiet for like 2 months. Last year was of course a lot more interest, and it quieted down, but it has really picked up. And I think those moves that we have seen year to date in crypto, I think that just indicates that really people are not giving up. I think everybody is kind of like in this wait and see mode, and if the market starts to move, then they're coming back. And I think that's what we're trying to highlight a little bit with more kind of actionable insights, why certain tokens are moving, and just kind of quick data points that we're trying to provide on-chain and off-chain data points.
Yeah, I guess the perspective I'd add is, I think the distinction between sort of retail investors and institutional investors is pretty large. Your retail investors want a dashboard, they want those kind of signals. They're not here to invest lots of time, so they want those insights delivered to them like as fast as possible. Your institutional investors willing to take much larger data sets, crunch them, sometimes won't tell you what they're doing with it. They don't always want give you that feedback, because that's them building their alpha. Chainalysis, we're more focused on that institutional side, of course. The other thing that I think is interesting is crypto businesses that are actually trying to understand like what's hot on the blockchain. It's less of that investor or trader use case, but I can see that growing over this next year. And actually, a thing that I find really fascinating about this particular on-chain data space is there's just an explosion of tools. It's kind of like anyone can go get the data from the blockchain, but then it's about kind of adding that value, adding that insight on top of it. So whether that's actually going from addresses into entities, sort of the actual exchanges, whether it's understanding the flows between them, whether it's then actually writing words to go alongside the numbers to help interpret that. That's really the game, I think, that all the different tools and providers are in. It's like, how much extra do you sort of stack on top of that just raw blockchain data? I can tell you, if you go to raw blockchain data, you're going to struggle to find a really good investment thesis. And so you do need to start going up that stack. But different types of customers almost have like a different appetite. Some are happy to stay at that lower level. Some want the largest amount of data possible. It's very similar to financial research in the same way that it's a diverse market. But what's kind of fascinating is there hasn't actually been like any real consolidation. There just seem to be kind of new companies every day kind of popping up. And you get everything from like June Analytics doing open source dashboards, to the businesses that we're all involved in, where we try and layer on more and make a business out of it. So yeah, it's still a really diverse industry that kind of keeps growing.
Nice. Okay, so we do have about 15 minutes left. Thank you for all your thoughtful responses to those questions that I asked. We have a bunch of questions in the chat, so we'll just go through in the order I think they came in. The first question is in the chat. It's, what on-chain metrics have you seen to be most correlated to asset price movement?
Well, I think one thing is probably also TVL. We haven't really talked too much about TVL, and of course, there's a lot of debate how valuable it is. But I think currently you can argue that that Lido is attracting a lot of attention because of the Shanghai upgrade in in March, and that's why the Lido token is performing, very well. And I think that's kind of like one of the, I guess, signals that we haven't really mentioned before that we look at, and besides all the others. But of course, there are tons of indicators to look at.
Yeah, well, one thing about correlation I would say is not it changes over time also. So saying that which one is more correlated with prices in which period. So it changes over time. It decorrelates and increases again in correlation depending on what's happening on the market, where we are in the cycle. So, but you can see it in active addresses. You can see it in transactions. But again, like I said before, it's not the level of the data set that you should be calculating correlation, because that's all correlated. So the growth in so price growth and the growth in the variable that you are using. So active addresses, but use the growth, and that correlation is not stable over time. It changes also. So you just keep that in mind.
Yeah, I'd say if you like very pure, rigorous statistics, don't come into crypto. Like, I think of things as in epochs, and like you might have a distribution that holds for like one phase, and then it will change again. The key thing that you have to watch for, and this is basically exactly what Julio said, like you want to make sure that the variance of any model that you're fitting doesn't start changing. So like the tails will start getting really large, and that shows you that actually things are starting to break down, and you really should just drop that bit of history and start remodeling in a new epoch. So yeah, it's not a stable statistical system, and so correlations can be pretty dangerous. Like, I think a lot of people get caught out, right, by relying on just standard statistical models.
Cool. Then we have 3 questions. There's one for targeted at each of you, but if you have thoughts on a question not targeted for you, feel free to share them. The first one is for Philip. Can Philip explain what he said about money leaving Binance going to Coinbase and money leaving Coinbase going to Binance to remove the noise?
Yeah, so I mean, Julio put this in a nice example. Looking at these net flows between, say, a futures exchange, a derivatives exchange, and a centralized spot exchange. What you're interested in is money kind of leaving a centralized exchange and going and spending time, as it were, on a derivatives exchange. That typically shows you that there's a lot of appetite for risk. And the reason why the net amount is important is because there's a very high gross amount, but assets just going back and forth as market makers balance between the two different exchanges. And so looking at these net flows, be it from a spot exchange to a derivatives exchange or into DEXs, or even between centralized exchanges that typically trade for fiat and therefore an off-ramp versus ones that typically just trade to stable coins, and therefore people kind of staying deep in the crypto ecosystem. Understanding how assets move and stay indicates the type of user or almost mindset or mentality of the market. And it just removes all the noise, not all, but a good amount of the noise of all the market makers and arbitrages.
Okay. And the next question is for Julio. You mentioned normalizing an exchange's volume with its reserves. Where do we get the reserves and how can we trust them?
Well, the reserves, we have an estimate for that. So we track exchanges' wallets. We track it on real time on the blockchain using some, machine learning clustering algorithms. We can determine which set of wallets and set of addresses belong to an exchange. So we have a really good estimate of what the exchange has in their reserves. And trading volume is is data from the exchange. So combine those two. But for reserves, we as an on-chain data provider, we have all that information, all that data for a number of exchanges, like 30 or plus exchanges. So you can get that data from us and well, also and trading volume also you can get it from us, but it is from the exchange that we get it.
I have one question that so I often actually use inflows rather than reserves when looking at that ratio, because you can get quite big differences in exchanges that people typically use for custody versus exchanges that people use kind of for trading platforms. And I typically think it's the inflows, because those are the assets that people are looking to sell, that you know, and therefore they're kind of then traded. That is sometimes the more interesting metric, or the more interesting ratio. So just interested if you think it should be trade volume divided by reserves or trade volume divided by inflows. Just curious.
Yeah, and also trading volume divided by both inflows and outflows, you know, because it's, you know, the total activity there is going on in the exchange. So yeah, of course you can use those. We use volume and reserves, and also the total inflows and outflows from that exchange to gather all activity.
Cool.
Okay, and then this one's for Markus. What kind of regulatory announcements are favorable for our industry other than a spot ETF?
Yeah, I think I guess the main question is still, what is a security and what is a commodity? I think there's still a lot of debate around this, and I think where a lot of people, you know, want clarity. I think this is one. You know, I think the other announcement is, of course, you know, who might be the next, you know, SEC chairman, for example. You know, I think there's, of course, a debate that, or expectations that maybe Gary Gensler wanted to become Treasury Secretary. Otherwise, he would have stayed in his current role until 2026, which he will likely do now, since Janet Yellen is going to stay in, you know, another round as Treasury Secretary. So it's, you know, it's unfortunately, it doesn't really seem that too much is happening right now in the US. And this is what I was saying earlier, that, you know, we should take note if, for example, any major financial jurisdiction is maybe becoming suddenly a lot more crypto friendly, you know, for various reasons. I mean, we heard, you know, from Hong Kong, and Hong Kong, of course, is potentially been tapped by China to be maybe a little bit more and more open about it, because also China has had in its 5-year plan really that the blockchain is part of their growth expectations. So who knows what's happening there? I think right now they're like, you know, the first steps, but it can also be something big. And if something big is happening, then it can have like a huge influence on the market. So that's kind of like the, you know, the kind of the main pillars I would be looking at.
Okay, now we're back to questions for everyone, although anyone could have jumped in on any of those. With the recent exponential rise of ChatGPT and AI being a more dominant development in 2023, how is crypto participating or incorporating the technology to capitalize on scaling the blockchain? Are there any crypto AI projects to look out for this year?
Interesting question. I would say that one application that I thinking of is how can we make for the user easier to look for data or to get answers from data. So maybe if we combine this, you know, ChatGPT with the blockchain data, we can make the user just, instead of they you know, coding a dashboard or doing it manually, you can just ask for it. You know, I need to know whether Bitcoin is undervalued or overvalued, and then, you know, in my thinking, the AI will give you the answer, right? The indicators or something like that. So that's one thing that I'm thinking of. And of course, you have to teach the AI blockchain analysis, right? So that's one setback. But yeah, that's, you know, what I thought when I saw ChatGPT. You know, it can use it to make the easier for the user to get, you know, the relevant answers or the relevant indicators for solving a problem.
Yeah, it's probably interpretation of the data, which is still, very, very difficult because it changes a lot and the relevance changes a lot and it keeps on moving. I think maybe the industry is a little bit too young for completely like standardized processes and everything. But I think the interpreting the data is really, I think, a key value factor.
Yep. I don't think I'd add to that is if you want to try and raise money from VCs in 2023, probably crypto and AI are good buzzwords to put in your pitch deck.
And also, I just want to add that I did ask ChatGPT to explain whether Bitcoin was overvalued or undervalued, and it doesn't have the answer yet. So you have to stick with us for a while.
Okay, the next question is, a couple of days ago, we saw some bankrupt tokens showing a price surge. How do you see this and how should we understand this?
Well, I think even from traditional finance, when a company goes bankrupt, it doesn't mean the value is zero. There's always like some, residual value. There's always some, so the assets are usually worth something. I mean, if I don't know, retail store goes bankrupt, there might be the land, there might be the office, somebody might be taking it over. I think even when Celsius went under, it was trading like at $1 billion, and I think that's just kind of like how people kind of judge. I think they're like different kind of people that betting. Some are really in the debt restructuring, and others really just trying to express those views through maybe the token. I think that's the way to explain. But of course, it's a risky business. I think when we heard, for example, that the FTX might have like found like $5 billion, the creditor or the creditor estimates on the cents on the dollar hasn't really changed that much. So there's a large discount to be played, but it's it's a highly volatile part of the crypto industry right now.
Okay, the next question, broad topic. What are your institutional clients mostly worried about?
Well, yeah, for us, the institutional clients, I will say the traditional large hedge funds over the last year, they were really not investing. They were really just building their digital assets teams. They were building their models. They were testing their models using our data, training them. So I think they were on the sidelines last year, and they are just waiting for confirmation to really enter this year. So I guess this year will be more of the institutional part of the market entering. So that's what we're seeing, for at least with the clients that we talked to. They were not really, as they were out, they were not really hit by what happened in last year, and they are now ready, just waiting for some confirmation to really enter.
Yeah, I think the biggest risk that we're hearing from large clients is really exchange risk. I mean, I think clients, they want to trade on an exchange that is fully regulated, that is fully accepted by the main jurisdictions, and I think people are kind of waiting for that as well. So I think exchange risk has, of course, been underestimated last year, and I think it still worries people where they can trade if they're going to be mixed with some flows that they that are not properly KYC'd and so on. So exchange risk is one of the key indicators or key risk factors for them.
Yeah, and I'd add to that, definitely exchange risk has been a big topic, but also like asset risk, understanding the smaller, longer tail of assets that might be used for collateral that don't have the quality. For example, FTT, there's a lot of questions of like, which is the next asset that's propping up someone's balance sheet that actually should be marked to market at a much lower value.
Okay.
Now I would just add, macro risk also. This year is macro risk is a big topic. Are we going into a recession or not? So that's also, delays some of these institutions from really entering the space.
Okay, we have one more question, and I think then we'll wrap it up because it's already 11 a.m. Eastern. So last question is, do you think these past events will cause token projects to avoid listing on centralized exchanges and opt for DEXs in the long term?
Who wants to take that one?
Yeah, I mean, like, probably yes, but I think the key thing, right, if you're a new token, is centralized exchanges can offer liquidity. There's a lot of liquidity on DEXs, but potentially from a very much more concentrated set of buyers and sellers. And so if you're trying to reach a more mainstream market, you still need to go to centralized exchanges, but there's always been regulatory risk around that. That hasn't gone away. It's probably increased.
Yeah, I mean, I would really answer this very similarly. I mean, you need the liquidity provider, you need the kind of the firm that backstops it. I mean, you have this very similarly also, I guess, with traditional finance on the equity side, where you have usually the IPO lead supporting the stock. And I think in crypto you probably need this as well. I think once a project more matures, it can probably move on, but I think initially it maybe needs more the support from the centralized market maker, because that's where the liquidity is. That's where the liquidity can also be better managed and geared towards.
Okay, and with that, we are a little bit over time, but mostly on time. Thank you so much to our lovely panelists for taking the time to join the discussion and share their thoughts. And thank you to you in the audience for tuning in and also asking some great questions. And hope to see you all at the Block's next webinar, and have a great rest of your week.
Thank you.
Thank you
Thanks so much.
Yeah.